Hello, good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain. With me is Aisha Faridi. And for-out consolidation is something that continues in the market after that freaky Friday and that 550-600 point intraday rally on the Nifty. Today it's consolidating a bit, but still around the 24,662 mark. A very narrow range is what we have really managed to be at throughout the trading sessions. So very little movement today at the index level. Having said that, of course, beneath the surface, there's lots what's happening, especially sector-wise as well. Real estate, of course, is one of the sectors which is doing very well, has seen the biggest intraday gain that we have seen in 6 months. So that index at one point of time was up 3.3%. Individual names like Oberoi, Prestige Estate and Macrotech, all of these stocks are in focus. Insurance stocks is also something that we are watching out for. Remember, this is an ET Now exclusive, which we understand that there could be some exemptions coming in for certain term insurance. So on account of that, some of these companies are in focus. We'll get Anurag shortly to join us and talk to us a bit more about the implication of that. But what's on the back foot is metal and IT. Clearly, global facing sectors are facing a bit of a headwind today. There's lack of global cues. The US market has been on the back foot pretty much for 7-8 trading sessions, barring one day perhaps. So there is that, nervousness around the FOMC meeting, which of course kickstarts tomorrow. So just ahead of that, we are seeing a bit of a consolidation happening, Aisha. But not much to say, at least at the index level, even though, of course, individual stocks are seeing some moves.
Yeah, a lot of pressure from the likes of a Titan, from a TCS, from Hindalco, JSW Steel. By the way, like Anisha was flagging out, some of the globally sensitive sectors like metals, they were a big drag on Friday as well, even though the rest of the market did recover from those vicious lows. Having said that, today it's a bit of an underperformance from Bharti, the leader from Friday. Remember, it sprung up about almost 4%. Today it's lower by about 1%. There's ONGC, there's Bajaj Auto, there's Unilever, Tata Motors, even the likes of an L&T, BEL, HDFC Bank, Trent, they're also flattish as we speak right now. If there's one space that continues to hold out, that's clearly real estate. And of course, we're going to be chatting in greater detail as well with our experts. But on Oberoi Realty, there's been a Spark capital upgrade from the previous sell to now out and out buy with a target price of 2,700, and even Axis Securities has initiated a buy with a target price of 2,560, and that momentum clearly showing up on Oberoi Realty as well as Prestige Estates and the entire sector. There's Dixon Technologies as well, that JV with Vivo India, wherein now they're going to be manufacturing or taking part of Vivo's OEM manufacturing, which is going to include their OEM orders, electronic products of other brands as well. So that's definitely auguring well for that sentiment on the stock. And Axis Capital has come out with a note on Swiggy as well. They've initiated a coverage with a buy of target price at 640. That stock is well holding up quite smartly, almost 9% in trade. But let's welcome on board our experts and figure out what they're making of this market and the kind of volatility we've come out with last week, the kind of consolidation at play today. We've got Kunal Bothra, Naresh Mirani and Andrew Holland joining in on the fundamentals of this current market right now. But Kunal, let me start off with you. A hugely volatile Friday and then today's price action. A bit of a drag down, but again, it's not sharply lower or anything like that. What is it that you're making of trade so far?
Yeah, I think from a freaky Friday to a mundane Monday for the markets, and I think more or less it's a range-bound market when we look at this on the index front. I think except for that intraday volatility which happened on Friday, more or less when we look at the last 5 days, 7 days trading action for the indices, it's been stuck into this 200 to 50 point band, for example, for the Nifty. Now, the good part for the markets is that the market breadth or sector participation, it keeps on improving with every zone where the markets consolidate. For example, last week we were looking at the first half of the previous week, we were looking at comeback from the high beta sectors like metals. Then we had a phase where the cement stocks did pretty well, and now we are at a point where the real estate stocks have started to pick up pace. So it's not as if there's any major sharp correction which is happening to sectors, but then on the legs for the market moves or the index moves, so you're seeing fresh participation from different kind of sectors. That generally indicates that the market breadth is getting a lot more vibrant. So this also indicates that even if the index consolidates, the bias has to be on the positive side for market participants. So maintain the bullish bias on the index, and any kind of a dip, a 50 point to 100 point dip on the index should be taken as a buying opportunity.
Okay, Freaky Friday, Monday, and of course the Monday morning blues perhaps is what we are feeling, because there is this shades of blue in the studio right now, right from Kunal to Aisha and myself, and I think that's what the market is feeling as well. There is that mundaneness, as Kunal is putting it. Andrew, what's your view? Is it going to be mundane for the rest of the year? Because FIs clearly would have checked out. And there's no major news to, apart from, of course, Fed, which we are watching out for the next couple of days. Then it should be fairly quiet.
Yeah, it usually is. I mean, December is typically over the years has been good for the market. So I still think that the hope there is for that Santa Claus rally going into the end of the year. But I think as we've seen previously, when FIIs kind of move out for their holidays, it's usually the kind of rotation around sectors and a lot of mid caps and small caps come into play. And I think that's probably going to be the basis of what we see for the next few weeks. So whilst the index itself might, not really do very much unless there's some big global event, I would suspect that that's what we're going to see is playing around at the edges. I still think that the big volatility is coming in January, when President-elect Trump takes over the U.S. administration and what that brings with it. So I think enjoy what we have at the moment, where there's no real news coming in the next few weeks, apart from, as you said, the Fed this week.
Absolutely. But Andrew, suffice to say that pain period of the market at least is behind us. I mean, are we out of the woods or not quite?
No, I don't think we're out of the woods, because the catalyst for our markets to move higher are just not there because of a number of reasons. Forget global for a second. I still think the GDP forecasts, which the RBI put out at 6.8% is too high, and I think it's nearer to 6 to 6.3%, which means that there's still got to be more downgrades, I think, to earnings in this quarter. So I wouldn't be surprised if January is when we start to see the earnings season unfold, we'll start to see more downgrades. Of course, there'll be some optimism towards the budget, but I don't think the budget's going to do anything to really help the corporates. It's really going to be downgrades across sectors, and I think that's going to be the key factor, which will probably take our market down, maybe towards. I think we're in that range of in Nifty of 22.5 to 25, and I think we'll probably maybe try and test that 22.5 again as the earnings disappointment starts to unfold.
Let's see whether we test that level or not. But what is testing right now is Swiggy, because that one is testing gains of almost 9% right now. So just watching out for a big move on that stock. Of course, there have been slew of initiations on that one. Just Friday, I believe there was CLSE that came out with a initiation, and today Axis Capital has initiated coverage on that counter. So that clearly is doing well. And of course, Scenes, which is their equivalent of District, is what they have launched for live events. So that must be doing quite well. And that One Black Premium membership that they had announced also in the week gone by, all of this is coming to fruition for the stock price right now, with a gain of almost 8%. And of course, real estate as a pack has been doing well. Naresh, what's the sense on real estate, and which is the strongest chart you would say?
It has been Oberoi Realty, which has been holding on to new all-time highs and continues to even take a move today after some broker upgrades. That's the one. Second is DLF, which has made a strong comeback and is now back to the zone where it was facing resistance. Closer to 900, 920 has been a resistance zone for the stock. We've seen a good recovery at 819 odd right now. So that could be a stock which could actually break out in the whole real estate pack. And then lastly, it would be Godrej Properties, which is where we are seeing some bit of a recovery today and a small range breakout.
Interesting. The one space, of course, that you can't take your eyes off from is real estate. We'll discuss that in just a bit, but here's some news that's coming in, and we're shifting focus now to a big ETNA exclusive, and we understand that pure term life insurance premium is likely to be GST exempted, as the group of ministers have proposed a complete exemption on this. Anurag Shah joins in with the latest.
So in last two GST Council meeting, there were expectations about the rate reduction on insurance premium, but it was not insurance issue was not taken up in the GST Council, but for the upcoming GST Council meeting of 21st of December at Jaisalmer, Rajasthan, this issue is likely to be taken up, GST rates on insurance premium. And as per our sources, group of ministers on insurance has recommended complete exemption of GST on term insurance, pure protection term insurance. So it will be a big development in insurance space because insurance penetration as per the global average is very low in the country, and to achieve the insurance for all target, GST reduction demand was happening from all quarters. So if we talk about the listed companies, then the share of term insurance in their total AP for HDFC Life is around 13%. For SBI Life, it's 10%. For ICICI Pru, it's 15%. And for the market leader, LIC, the share of term insurance for pure protection is less than 1% of their total AP as per the FY24 figure. Currently, there is a 18% GST is charged on the term insurance premium, and if it's get exempted, then there will be a relief of 18% for the policy holders who are paying for their term insurance premium. If we see the trend also in last few years, after COVID, there was a hike in term insurance premium, but in last 1 year, there is no change in term insurance premium. In fact, companies like ICICI Prudential has reduced the term insurance premium by 10%. So, group of ministers on insurance has recommended for the pure protection term insurance plans complete exemption of GST.
Okay, so that's the latest coming in on GST. But, Andrew, what will be your take on the sector? Because time and again, this sector has seen either tailwinds or headwinds coming in as far as insurance is concerned. How are you looking at the sector?
It's not a favourite sector of mine, to be honest, within the whole kind of financials. I think, even though the banks have not really performed the way they have, I'd still be more kind of looking at that side of the financials and possibly asset management companies at this point, rather than insurance. I mean, I heard your news flow, but it still has to come through, and if it's not coming through, it's another disappointment. So it's not a sector that it's in favour with us at the moment. I think there's much easier stories to play out there than insurance, where the government does play and regulators could play quite a large role.
On that note, let's take a very quick break. Just look out for Angel One. That stock definitely seeing a bit of a cool off. It's down about 4.5% right now, while metals, of course, sectorally is the one which is definitely taking a beating. We'll discuss all that and more, but on the other side of this break. Back to closing trades right here on ET now. Still a bit of struggle, down about 90 to 100 odd points and flickering over there. But the upcoming GST Council meeting, as we understand, in Jaisalmer, Rajasthan this weekend can take some decisions relating to automobiles. Which one of the recommendations can make the second-hand vehicles, including EVs, costlier? The other one can give a relief to auto majors having SUVs in their portfolio as well. In fact, Sumit Chaturvedi joins in with some exclusive info on that. Sumit?
Well, two main proposals are going to be taken up in this weekend's GST Council meeting. In addition to bringing down GST on life insurance premium, these two relate to vehicles. First of them is increasing GST on second-hand or old vehicles, including EVs, from 12% to 18%. That is one proposal. If approved, it is going to make the second-hand vehicles costlier by around 6%. The other one could give a relief to auto majors that were reeling under pressure of high GST notices which were issued to them on compensation cess. Well, this 22% compensation cess, there was ambiguity because of which notices, as automakers claim, were issued to them, and that's why they approached Finance Ministry on that. So we learn from sources this matter can also be taken up in this weekend's GST Council meeting. So these two separate issues will come up. One can make second-hand vehicles costlier, other can give relief to UV majors like Tata Motors, Mahindra and Mahindra, as far as vehicles and taxes on them are concerned. So these are two additional proposals in addition to other items, and we'll keep on updating you all the items that will be taken up in this weekend's GST Council meeting.
Sumit, for that. We trust you to get us all those details. But in the meantime, Andrew, what do you make of the auto sector? Because there is that sluggishness which has come, which has creeped in. There is that chatter of higher discounts. Inventory still remains elevated. What's your sense on the sector?
I think it's a sector to avoid in the very short term. You just highlighted some of the headwinds which it's facing. Of course, within that increased competition as well in terms of pricing and discounts. So I think it's going to be a tough time for the auto sector in the next at least the next quarter or so. And of course, with consumption falling, I just think it's an area I don't need to be in at this point. And I think the trade has been more kind of shorting FMCG autos and buying new age technology because they're the ones which are disrupting. So I think that's played out well, and I think it'll continue to play out well. So I think I'm going to avoid for the autos for the short term until I see some of this reflected in numbers by analysts in terms of downgrades, and that hasn't happened yet, but I think it's coming.
Andrew, what's leading to this sort of renewed vigor across the realty pack today? I mean, whichever stock you look at is currently on a tear. Oberoi Realty is now notching almost a 7% gain, Prestige up 5%, and so on and so forth.
So I think there's obviously some optimism towards interest rate cuts, going forward in India, maybe in February. And I think the real estate sector is something which we're seeing in the newspapers, all these huge deals that are going on, and certainly the demand is there. So you're seeing it across the board. So but I think it's again goes back to it's real estate maybe today and then tomorrow. Last week it was cement, and I think you're going to get this rotation now over the next 10 days or so till the end of the year with with FIIs away, and I think these themes will continue to play. So if you get a number of brokers all going and saying the same thing, which is what you've seen in real estate in today, it just pushes that momentum in the very short term. But I wouldn't be, again, I think these are more trading ideas than they are kind of long term kind of ideas at this point, because they've all done very well.
Okay, so that's the take coming in as far as some of these real estate stocks are concerned. But just shifting focus to what's happening in the market right now. Of course, Swiggy is doing well, but you also have KPR Mill perking up. Five-star business is doing quite okay. Nykaa in the last few minutes has managed to perk up, and some of the pharma names are also trying to, put their head above the water in that sense, because some of these stocks like Emcure, etc., are trending higher. But metals as a pack has been weak, and IT too. Naresh, what's your sense on IT now? It's time to perhaps take some profits the earnings season, or just stay put?
So I would be of the view that we stay put because some of the names are breaking out after 3 years. So you have Infosys, which was at this 1950 odd levels back in 2021, trying to break out. Something like a LTI Mindtree has broken out of a 2-year high. You have Tech Mahindra, which still has a lot more to go. So the structure is positive. We may see volatility for the results, and that could be an opportunity. If we get a gap down in some of the stocks on numbers, that could be the next time one could look at adding. Overall, new all-time highs on the whole index. And over 3 years of consolidation which has taken place, apart from a few names like Persistent or Coforge, which did really well, the rest of the sector, many names are still 10, 15, 20% lower than what they were in 2021. So there could be selective moves even from current levels.
Right. Okay. Let's take a very quick break on that note. But we'll thank Andrew on that note before we take a very quick break. Still at 24,723 thereabouts in the futures. Trying to recover a little bit. We have actually from the session lows, DRL, IndusInd Bank, Axis Bank, Bajaj Finance, ICICI Bank. Banks once again coming to the rescue. But Kunal, any closing ideas?
Yeah, so I think from the fertilizer pack, that's another sector which I believe looks attractive. Coromandel fertilizer is something which is looking attractive. The stock trading just at the verge of a breakout around the 1800 mark and forming a bullish flag formation. So we'll look out for targets in the range of 1850 at least over the very near term.
Right. Naresh, what about your closing strategies?
So it's the same one, Coromandel fertilizer, one of the few stocks closing near the all-time highs. And the trend is strong in the sector as well. So expecting a move towards 1880 in the short term, stop loss at 1850.
Fundamental news from Coromandel, because of which the stock is reacting, is that they held the analyst meet and they've come out with some fresh targets with respect to the year. So we understand that they've talked about 40% increase in EBITDA per ton is what they're talking about, and this is on back of the expansions as well as the backward integration that they have done, and that's the reason the stock suddenly saw that shot up during the trading session, is now holding on to gains. A quick break and we'll be right back for the last 30 minutes of the trading session. Welcome back. A bit of a recovery from lows, but we are not yet at that 24,700 mark. Just slowly and steadily seeing a bit of a move as far as index is concerned. But individual names from these industrials and capital goods space, so electric manufacturing, services is something which is doing well. So Dixon, on account of that tie-up with Vivo, is up 5%. You have BHEL, which is managing to hold on to a 2.5-3% gain as well, and some other names like Bharat Forge, etc. as well. Kunal, what's the view on Dixon as well as BHEL?
Yeah, so I think BHEL, Dixon of course is one of the strongest names. The stock is perched now at 18,700 plus mark, exceptionally strong in terms of the price trends. I think the last time we'd seen the stock trading below the 50 DMA was in the month of October, November, when the stock had corrected back towards 14,250 approximately. So from there, the stock has looked quite strong. It's been more consistent with the price trend for itself, and it looks like the stock is now heading towards the next round psychological mark, which is the 20,000 level. So wouldn't be surprised that over the next few weeks we actually see the stock scaling up by a margin of another 5% broadly. BHEL could be an interesting case. The stock, on the recent past has been showing signs of a bullish flag formation. Now 255 approximately was the high or the recent swing high for the stock or the very near term. It's still trading neck to neck closer to its longer term moving averages. So which means that now if this after this 2-day, 3-day correction for BHEL and a retest towards the 240 mark and now back to that 247 to 48 levels, if the stock crosses about 255 mark on the upside, then I believe that it could complete a classical flag pattern breakout, and that could lead to at least a 15 to 18 pointer up move for BHEL from those 255 levels. So I would not suggest a buy at current levels, but I think above 255 this becomes a very attractive breakout candidate for a potential target of 273 plus.
Not just the electronic manufacturers, but even durable players are fairly active, and we know the reports doing round that LG is likely to hit the bosses in India. In fact, it's eyeing a valuation of $15 billion for its India unit, and the roadshow is expected to be over the next 2 months, and perhaps in the first half of the year we'll see LG hitting the bosses as far as India is concerned. What does it do to the consumer durable space in India? Mayuresh, that question is for you. How do you see this entire durables and EMS space shaping up?
Afternoon, Anisha. No, I think the space is poised for a significant amount of growth, and they've got significant tailwinds to probably support that. So in each functionality that they are now operating out on, the expected opportune market size globally and in the Indian context is absolutely expected to be at least 3 or 4 times than the market size that currently exists over the next 7 to 8 years. With a lot of impetus that has probably now been given in terms of local manufacturing, in terms of PLI schemes, a lot of companies are probably expanding their back-end network significantly so that supply chains probably do not remain an issue. And over-dependence on China in terms of input costs or raw materials does not pose to be a huge problem going forward as well. With all this in mind, the expectations in terms of the core EMS players, I think the immediate opportunity that probably comes through might be semiconductor chips. Expectations in terms of more work coming through as more manufacturing is expected out of India, whether it's smartphones, whether it's LED TVs, or whether it's high-end refrigerators as well. And therefore, I think not just the OEM part, where margins are a little bit minuscule for these players, but expectations of doing the original design manufacturing work, which is the ODM part, where margins are relatively higher. As that percentage as a proportion of overall top line starts improving, along with more orders coming in and backward operations being taken care of in terms of raw material supply and stability thereof, margin expansion probably might be one element probably to get along with the exponential top line growth. Obviously, I think the market size itself, as I said, for Indian EMS industry should be 3 or 4 times, reaching almost $60 to $80 billion over the next 4 to 5 years. So I think all these players in a sweet spot. Obviously, Anisha, you can keep on arguing valuations are expensive, and they are. compared to their own standard deviation means over the last 5 years. But I think if numbers keep on coming through with more innovations expected, I think the momentum in these stocks can very well continue. So I think some certain stocks like an Avalon or a Dixon is something that we continue holding both in our local and our global portfolios. Obviously, we've taken these stocks at lower levels, but our own take is that if earnings come through, the momentum in these stocks might very well continue.
The other thing, Mayuresh, which has been pretty buoyant in the market as well, has been the entire capital market theme itself, right? And I ask this because you've now got DAM Capital, which has pretty much been the banker to every IPO, and successful ones at that, also IPOing itself very soon. And other than that, of course, we've seen the kind of move on a CDSL, BSE, Angel One, the entire lot. What is it that you're making of this theme and whether it has further headroom to go?
So afternoon, Aisha. Obviously, I think capital market participants have done exceptionally well for the last couple of years. Obviously, the accretion that we've probably seen in terms of demat account additions, as an example, the SIP flows, which are continuing at a good pace. And obviously, I think equity as a ownership in terms of the overall asset pool that we probably got, it's still 5% way lower than the global average. So I think as more and more investors pile on and expect that markets probably have proxy in terms of how the economy is expected to fare and how you play it, whether you play it through depository participants, whether you play it through brokers, RS management firms, or PMS or specialized AIFs, which are listed as asset managers itself. I think this pool has to grow over the next few years. In fact, a couple of slides, if you go through in terms of either the asset managers will probably put forth, the kind of household incomes that will go up, specifically as far as middle income households are concerned, and the top tier households as well. You will need specialized advice in terms of allocation of their assets in a multi-asset format. And therefore, I think professional advice will be needed. So I think this play will continue in the Indian context. We've just started, as I say. Valuations, obviously, Aisha, a tad bit more expensive for depositories like a CDS at this juncture, exchanges like BSE at this juncture. But asset management companies, I think, are still sweetly placed. They're getting a good amount of inflow in terms of SIPs. A large part of their cost has now got gestated over years of running their operations. And therefore, as incremental flows keep on coming into their funnel, I think a large part of that reflection will happen in terms of both their EBITDA as well as bottom line growth. So I think something like an HDFC, AMC, UTIMC, a couple of these asset management companies should be kept on your mind.
Okay, that's the take coming in on some of these capital market plays. Kunal, today on Angel One, though, do you think days like this could be a good buying opportunity, or do you think these stocks have already moved up a whole lot?
No, I think there is a lot of room on the for the stocks on the upside, because what we are seeing is a kind of a classical weekly, monthly breakout for stocks like Angel One, which started off for a stock which started off coming out of a consolidation. So, for example, 2023 top for Angel One was around 3,500, 600 mark. The lows the stock had made was around 2,000, 2,100 levels. There was a sharp correction of more than 30-35% for a stock like Angel One. So, it's now just coming back to recuperate the losses the stock had made from that 3,500 kind of a top. So the breakout and the kind of volume mix which we've seen in the last 3-6 months of the price recovery for Angel One indicates that the stock is yet to surpass levels of 3,500. So I think in that aspect, this should be taken as a buying opportunity. Now, what matters over here is that whether this is just an individual move or whether there is a cohesive move across the stocks from the spectrum, where you've seen the likes of Motilal, for financial services, JM Financial, etc. Many of these stocks are also coming out of their big consolidative price ranges. So which means that this is more of a synchronized price action move across a lot of brokerage houses. And I think in that aspect, I would probably look out for 3,500 plus at least as a minimal target for Angel One.
Okay, so that's the take coming in as far as Angel One is concerned. But in the meantime, which are the other stocks which are buzzing around on news flow? Not many, to be honest. We're fairly quiet. Vedanta, of course, is in focus on account of that dividend that they're going to mull. But the entire metals packs is as it is in the red today. So not a runaway rally there. NMDC was in focus on account of some iron ore prices volatility that we were seeing. And then, of course, from the frontline index, some of the pharma names were perking up. Dr. Reddy's being the case in point. Kunal, what's the view on some of these pharma names? Dr. Reddy's, Glenmark, Wockhardt. Some of these stocks are doing well in the trading session today.
You're not very bullish on the pharma pack, but yeah, I think these stocks are again coming back into a slight recovery. So there was a point where Pharma index, and that was in the mid part of 2024, where the Pharma index did exceptionally well. And there were two sectors which start to look very attractive, because many of these pharma stocks at that point of time were coming out of their 3-month, 6-month, 9-month kind of a corrective phases. Now, we are into that phase after this last 2-3 months of correction from the September highs, that many of these pharma stocks are trying to make a comeback. Some of them, for example, Dr. Reddy's, I think, is on the verge of a retest just above its 200 moving average after falling from 1400 levels to as much as 1150, 1130 mark. So, which means that the stocks have not yet retraced even 50% of the price correction these stocks had shown. So, I would probably expect that the pace of rally for many of these pharma stocks could be very slow, very gradual. Yes, for someone who's looking at a risk, a low to moderate risk appetite, I think for them this could probably be an attractive space, because the beta nature of these stocks is inherently very low. And I think in that aspect, maybe one is looking out for a 10 to 15% return with time span stretched to 6 months to 12 months. I think that could be a good strategy.
Right, okay, that's the take coming in on Nifty Pharma right now. But Dinesh, on the charts of a Nykaa, and then of course, Mama Earth as well, that's Honasa Consumer.
So Nykaa seems more interesting. The stock has entered the derivative space also, volumes have increased. And if you look at the last 10 sessions roughly, it's made same bottoms around that 165 mark almost every day. And the interim highs are closer to 176 in those last almost 2 to 4 weeks. And today the stock tried to cross above 175. That's an indication a reversal is in play out here. Could go back to 190.95, and if it sustains 190.95, then we could call it a trend change, because 190 was a problem zone in 2023 as such. So overall looks interesting. Could be a risk reward trade with a stop loss below 169.
Point taken. So that's a view coming in as far as Nykaa is concerned. But what's the view for 2025? This is a question we posed to our whole of experts which were joining us at the IEC New Delhi. Hear out what they have to tell us.
For me, one is the new technologies are dematerialized and they scale up so fast that they become available to the poorest of poor. And that's where most of the wealth will be created. Earlier times, the wealth was in physical people. That's why it's called capita. What do you mean by capita is number of heads you had. Then it became land, and now it's becoming the new games, new experiences which you will create virtually. And for me, the next 50 years will create more wealth out of those newer things.
India really has once in a generation, once in a lifetime opportunity to get manufacturing back, which we completely missed. I mean, if you see the history of the world, countries go from agri-society to manufacturing to services. We leapfrog from agriculture to services, but we miss the middle of that. There's a possibility in next few years, and now that the relationship between the two countries are improving, there's a possibility that I think over the next several years, we have a lot of opportunity in that space, what India can manufacture, not only for India, but also for the rest of the world.
India moves up from, I think, as we'll move to a $5 trillion economy, per capita income will move towards, $3,000, $5,000. The household savings will increase. And Indians, unlike the Western world, they love to save. They save for themselves, they save for future. Anything to do with savings, I think anything to do with wealth management, anything to do with the stock market, I think those are the companies and the sectors that I believe will do well.
I think India is going to be a wide sector participation. So diversity equity funds will be the best actually to play the India story.
Okay, that's the take coming in on the themes to bet big on in 2025. But in the meantime, just taking stock of where the market has been settling in at, and it's pretty much a status quo, while there have been some attempts of a bit of a clawback from the intraday lows, but not a meaningful one at that. We're still lower by about 92 odd points or so. Nalco, Adani Green, Jindal Steel, Titan, TCS, these are all stocks which are weighing heavy, as is underperformance for the likes of an ONGC, Infosys. Even HDFC Bank hasn't done a whole lot, or for that matter, L&T too. But Mayuresh, just wanted to understand what's on your buy list right now. While the market may have recovered from those stark lows, but anything that you recommended buying maybe a month back and continues to look good according to you?
So actually, I think quite recently we have recommended a buy on Affle India. Our take is that the numbers have been pretty resilient. They have shown in the first half a growth of 27% as far as top line is concerned. EBITDA growth has been in excess of 31%. Now, if you look at the last 5-year average, they have delivered a 47% top line growth with a 40% EBITDA and a PAT growth as well. Now, the best part about Affle India and their model is that the cost per converted user is showing an increasing trend. So it is currently at 57 odd rupees. What they have converted in terms of number of users, FY23 almost 25.5 crore users, FY24 that figure landed to around 31.3 crore users. As we head into the first half of this financial year, you're already at 18.5 crore users. If you just double that for the second half itself, you're going to see exponential growth come through with increase in CPCU rates as well. And therefore, I think top line growth should continue at a good pace. The demand stack that they're working with on the platform is expected to show exponential increase as well. Catering to numerous industries, including BFSI, Pharma, they've also got a gaming platform that probably comes through. And therefore, I think numbers should probably show an increasing trend. There is no leverage on the balance sheet, and therefore return ratios and earnings should hold up for a stock like Affle India. The other pocket, as I said, agrochemicals should do reasonably well over the next couple of quarters, to say the least. Good Rabi harvest that has probably come through, good reservoir levels as we see. A few companies have reported extremely good set of numbers. They're doing backward integration. Case in point, the company by the name of Paradip Phosphates. They are doing backward integration as far as phosphoric is concerned. They're expanding capacity as far as sulfuric is concerned. They've reduced their debt equity. Farm gate prices have remained extremely stable as we speak. Input costs have come off. And therefore, with the coming season, I think volume growth should be reasonable, should effectively play out in numbers. And as we head into the first half of the next year and head into the Kharif season as well, I think the good show should continue with improved balance sheet dynamics. So I think agrochemicals as a space and Affle India as a standalone stock out of the mid-cap universe is something that we are liking.
Okay, point taken. So those are some of the top recommendations coming in. But in the meantime, let me take it across to Prakash as well. He's talking about some relief that the OMC companies are expecting from the government. Prakash, some of these stocks are under pressure, but what exactly is the news flow and what kind of compensation are they demanding from the government now?
Yes, there is a positive development for the oil marketing companies, as we are learning from our sources that the government is likely to provide relief to the OMCs. We are given to understand that the relief is likely to be provided on account of their losses on sale of LPG. In fact, the oil ministry is preparing a proposal to seek compensation from the finance ministry, and the consultations with the oil marketing companies have been completed regarding the proposal. Our sources are also suggesting that the oil ministry is likely to seek rupees 20-25,000 crore from the finance ministry. In fact, OMCs are incurring loss of rupees 150 to 200 on the sale of every domestic LPG cylinder. They have been facing losses for past several months. In fact, their profit has been reduced significantly during the second quarter of the current financial year on back of reduced refining margin and sale of LPG below market rate. The oil ministry believes that the LPG prices will remain firm in the international market due to higher winter demand, and therefore they are seeking compensation from the government. In fact, sources are also confirming that the oil ministry wants that the compensation amount to be announced in the upcoming budget. Let's see how it pans out, but at this point of time, there's a positive development for the oil marketing companies.
Yeah, OMC is definitely in the fray, and it seems that they're the ones which should be getting some amount of news flow. That's what we are picking up. Under pressure, though, in today's trading session. But look at what's really happening across the realty pack. That continues to look good. Oberoi Realty, Prestige, Lodha, these are your top performers today. Where is DLF though? I don't think DLF is quite participating in today's move. That stock perhaps is a little bit, no, that also is holding up. I stand corrected, 2.5% higher. So it's pretty much a sectoral move. But Mayuresh, not quite the same momentum as is the case with realty for some of these world economy facing sectors, be it an IT or for that matter, even metals. Metals, in fact, on Friday as well, with the rest of the market, didn't recover and was one of the sole losers of a sector. What is your own take on metals right now?
So I think I'm not expecting much because a large part of the LME realizations depend on how China will probably behave. with all that has probably come through in terms of stimulus announcements so far, and our interactions with the home team based in Shanghai in China, I think a lot of inventory is still not sold off, and therefore real estate still seems to be a big grappling issue as far as China is concerned. And obviously, I think their factories have to keep on churning and utilizing the fixed costs that they're probably generating, and therefore they're dumping to large parts of the world. So if you look at HRC, CFC prices over the past few months, they've actually started coming off quite significantly because of the dumping that we're probably seeing. A large part of the dumping is also happening in Southeast Asia. And therefore, I think with China expected to continue this, the softness in terms of LME realizations might continue. On the domestic fronts, volume quite very well down, but a large element in terms of realizations not improving might still be something to probably ponder about. On the other hand, if you probably look at the European side of the business, a large part of this business is getting skewed towards green steel. And therefore, I think the processes need to be modified to ensure that we produce steel through green modes. So either that's through the electric arc furnace route or otherwise. So I think there will be changes that probably happen in terms of traditional steel making, which will ensure costs and capital expenditure on a lot of balance sheets across metal companies in the world. The only thing Aisha working in their favor is inventory levels are absolutely low across the pack, whether it's steel, zinc, lead, copper, aluminium. But unless I think there is some element of hints of recovery coming through, and that hints of recovery coming through in terms of both China coming back and demand in Europe and the rest of the globe catching up, restocking will not take place in a significant fashion, which will keep LME prices subdued. I think for a large element of the metals pack, I think earnings might remain subdued. Again, aluminium players should largely do okay. So I think stocks like Hindalco, as an example, might be a standout because of their captive sources that they've got, both in terms of alumina, bauxite, end user applications as far as the Novelis operations are concerned, or lithium and batteries to a certain extent, while aluminium casing still forms 31%. So I think Hindalco might be a standout performer, but generally I think it might be a subdued show as far as metals is concerned.
That's the take coming in. So just watching out for some of the metal names, but do watch out for Swiggy in the trading session. That is past the level of 600 rupees now. It was, of course, trading at a huge discount to Zomato, but a lot of initiations have happened and people are saying, yes, it's second, but it's still in the race and clearly catching up really fast. So whether it's a, kind of announcement of scenes, whether it's coming up with a lot more SKUs as far as Instamart is concerned, they're definitely back to the fight and the stock is up almost 13%. Just shy of 600 bucks now. Would you still be a buyer on Swiggy at 600 rupees, Mayuresh?
No, unlikely. Obviously, I think the discount has come up, Anisha, but I think it still needs to be proven whether what the management has probably spoken about in terms of getting the 3% EBITDA margin in the food delivery business by December of next financial year, and the Instamart or the Bitcom business breaking even 2 quarters after that. So I think if the next quarter is a testimony of what the management has spoken about and the losses start reducing, I think the premium or the discount that Swiggy had in terms of its comparison with Zomato, though it has narrowed down, I think there might be still a re-rating down the corner. But yeah, I think a stupendous move today. I think I was not expecting that. But again, I think a large part of it is now largely getting priced in.
Okay, a lot of it getting priced. Stock on a tear, almost up 13% as we speak right now. In fact, on that note, let's also take in some BTST ideas. Naresh, what's on your list? Naresh, you'll have to unmute yourself.
Yeah. Continue like Coromandel Fertilizer, very close to a breakout into new all-time highs. Stop loss at 1800, target price of 1880. Signals are buying. Dr. Reddy is trying to cross the recent swing highs. Could catch some momentum. Stop loss at 1255, target price of 1320.
Kunal, what about your BTST ideas?
So the first one is a carry forward of what I recommend in the morning page industries. The stock looks attractive. Now I think perched at fresh multi-week high for itself, trading above 49,000 marks. So maintain targets of 50,000 over the very near term. Stop loss can now be traded to 48,500 for traders who are looking at a fresh trade. And the second would be upon Samvadna Motherson or Samil. That's a chart which has come back from its sub 200 moving average of 165 levels to now 168 plus mark. Looks attractive for a target of 178, stop loss at 163.
Okay, point taken. Take a look at United Spirits. In the last few minutes, there has been a bit of a perk up on that. Let's try and bring up the intraday chart and see whether that's really showing on the charts or not. Yes, there has been a sudden perk up on that. that stock. In fact, Alcobev as a category has been something which has become a bit of a favorite of select investors. In fact, I remember speaking with Mr. Madhu Kela last time, and he was quite positive about this entire space, and few other select investors as well. Mayuresh, what's your sense? Yes, it might be under-penetrated. Yes, it might have some other levers, but it's getting fairly competitive with global as well as, national players launching new products and coming up with fresher ideas here.
No two ways about it. But again, I think our whiskies are also making an international mark, Anisha. So I think we are getting those awards, and our whiskies are very well appreciated for what our guys are doing. Again, as a theme, I think there is significant amount of scope for significant volume growth to probably happen. The entire premiumization element for all liquor makers have actually started working in their favor. And obviously pricing remains in their favor. Again, there is hope that there might be price increases in certain states that might come through in the next few months. And if that probably happens, that becomes an added advantage and abets the overall volume-led price growth that one speaks about. On the other hand, if you probably look at input costs, molasses are probably behaving at this juncture where the expectations of glass prices, barley prices across the universe for alcohol makers, they remain stable at this juncture. And therefore, there is an element of scope that as consumption patterns evolve, as volumes pick up happens, as premiumization happens, as pricing remains in their favor, that element of operating leverage starts getting played out on balance sheets as well. So yeah, we remain constructive on this space. Anybody holding stocks like a Radico or United Spirit should continue
to hold these stocks. But Kunal, do they make for a good buy at this juncture?
And no major trends for many of these Alcobev names, because I think United Spirits, for example, just about last 2 days, the stock was trading very close towards its 50-day moving average. The high the stock had made, around the 1650 odd mark was just about a few months back. But post that, the stock has neither gone to a very sharp correction, nor in this recovery the stock has shown any kind of a V-shaped recovery or a major price action move on the upside. So which means that more or less the stock is consolidative or trading into a range. The ideal time to buy these stocks are those intraday dips or corrections and back towards their key support levels, where the risk reward starts to look a lot more attractive. If you buy them at medium, then I think the chances of consolidation and then holding on to the stock is pretty much on the higher side.
Okay, let's begin winding up for the day then, and we are definitely closing in with a 90-odd point sort of downtick, so didn't quite manage to follow through from Friday's session. 95 points lower on the Nifty futures is where we're shutting shop for the day. The key large caps firstly under pressure. Sectorally, it was definitely metals, oil and gas, infrastructure, power, even technology, and some of the financial and FMCG names were on the back foot. So the likes of a Titan, BPCL, Hindalco, TCS, Shriram, Adani Ports, ONGC, Adani Enterprises, they were all the laggards in today's trading session. From within the gainers then, it was about Dr. Reddy's and IndusInd, Bajaj Finance, which held out well. ICICI Bank did okay, and then it a flourish move for an SBI and a Kotak Bank. And that was pretty much the case with an ITC, Trent and L&T as well, along with M&M. The broader market is where pretty much all the buoyancy was. So be it the new age stocks, be the capital good names, banking, pharmaceuticals, and of course media and realty. That's where your big winners were in the session. First, talk about the new age names, and the entire pack was a buzz. Starting off with a Policy Bazaar, which closed in with a gain, less than 1%, but a great gain nonetheless. You had a Naukri, which did very well. Paytm was up about 2.5%. Zomato held out by about 3%. Nykaa was up about 4%. And of course, Swiggy is the one which made those delightful gains, standing with almost a double-digit gains. 12% is the kind of move that you had on Swiggy in today's trading session. Other than that, of course, it was really, realty all the way. Look at the kind of moves that you had on an Oberoi Realty. It closed in with almost a 6.5% gain. The index is itself, like you just saw on your screens, with a 3% move coming in on that stock, or rather the index. There was Hoodco, 5.25% uptick there. Prestige, which held higher by 4.5%. Lodha looked good with 3.5% move. DLF held out very smartly. Even a Godrej Properties, which closed in with a good 1.7% gain. So good day, but very sector specific at that. We'll wind it up right here then on this edition of Closing Trades. Thanks for watching.